This is JD Henry with the Key to Understanding Credit, the #1 bestseller book on Amazon. Today I have back for the second time my dear friend and guest, JC Hearn. JC is the Commercial Real Estate Director here in Huntsville, Texas, Walker County for Homeland Properties. And today he's going to discuss real estate syndication, how that works, and define that. And we'll go from there. JC?
Well, Jimmy, thank you for having me on. And I do appreciate the invitation and your friendship. I did want to speak a little bit about something else I'm involved in, and that's real estate syndication. So real estate syndication is really just pooling your assets with other people. And some of the benefits of that is that it doesn't allow you to access larger deals or properties than you would normally maybe be able to buy. It gives you some diversification of different types of assets. It can provide passive income, and it will typically allow you to have more professional management or more sophisticated or experienced people operate that asset for you. It also gives you economies of scale, because as you can buy larger properties, typically those larger ones can produce more profit, and then that's distributed back to the investors. And it also helps mitigate your risk. If your investment is not the entire pie and only a portion of the pie, you're not as much at risk if the investment doesn't perform as you anticipate.
So basically what you're saying, say I'm looking at buying some apartments and I can buy 10 and I can afford that on my own and get the financing, but there's an apartment complex that I'd like to own, but it's 500 units and there's no way, I don't have the assets and the strength and financial ability to do that on my own. So you help put together other like-minded people like myself, and we pull our assets together, and then we're able to buy that whole 500 unit complex together. Is that right?
That's correct.
Okay.
That is the way that it works. And the reality is, a lot of times that 500 unit complex will actually make more profit than the 10 unit, because some of the expenses and overhead doesn't go up in proportion to the number of units as quickly. So that's where that economy of scale is. The larger the asset, many times it is cheaper per unit to operate.
And what are the basic cost of maintaining a complex like that? I think they're all the same regarding from a big complex to a small complex, but for information, what is the expense of maintaining? What do you have involved in maintaining that unit and stuff that you have to pay for? Example, like property taxes that you share with the other owners.
Yes, yeah, that is a huge component of it in the current time is property taxes, and always been a major factor in Texas. And again, that's why it is really beneficial to partner with somebody that is highly experienced, because many times we'll hire a property tax consultant to audit that property taxes and even negotiate or litigate those taxes down to minimize the expenses. Another significant expense in the current time is insurance. And again, when you have a team that's able to work and engage experienced insurance brokers and shop multiple carriers and look at different advantages that you can gain, you can many times operate and find lower cost insurance, which increases your profit or your net operating income from the investment. And a third one is property management, because every asset's only going to be as profitable as it is operated, and having a team that is experienced in managing the asset, whether it be apartments, car washes, or any type of asset, is absolutely critical. You need to have an experienced team to operate it efficiently, make sure that it is profitable, and to minimize your expenses.
Also, you had mentioned passive income. For the audience's information, explain passive income and what it means, because I read a lot about passive income and what's going on.
Yeah, passive income is basically, it's income that you receive without being actively involved in the investment. So when you invest in a syndication as a limited partner, you will offer your capital to the general partners or the principals that will operate the asset, and in return, they will typically give you a portion of the cash flow as the asset's operated, and then many times a percentage of the net proceeds upon sale, or basically the profit when the property is sold.
Yeah, and see, something that big a scale of 500 units, I have owned rental properties throughout my life, and anywhere from 1 to 5 rental houses. And of course, I did a lot of work myself. Every time somebody moved out, you had to either change the carpet or paint the walls or fix stuff and get it ready. And of course, the good thing about, I think, these real estate syndications is that they handle that all. I mean, time is the most valuable thing that all of us have. And it was very hard on me to not only manage those houses, but to do some of the work themselves. And these syndications, they have their own groups and maintenance people, if you will, and that saves you a lot of headache. Basically, I call it mailbox money. You go and get your percentage off that syndication of how much passive income, which means you're part of the money that you receive for belonging to that real estate group.
Yes, Jimmy, you're exactly right. That is a common struggle with, I think, a lot of investors. And when you start out, myself included, I mean, you're doing everything, and then as you go along, you learn there is opportunity cost to your time, and sometimes you would prefer to spend it with family or friends or vacations, and you don't want to be actively involved in that day to day. And I think syndication can be a powerful tool as far as letting you invest in real estate without having to be as actively involved and still benefiting in the profits.
Well, you recently have been involved this past year in putting together several car washes, and tell us about that and how that syndication works, and the benefits of that, because you're definitely not out there cleaning up the car wash. There again, it's a big project. You invest your money, and basically you forget about it until you get your monthly check.
Yes, so I did have an opportunity to come up with a longtime client that's already owned and operated 65 car wash locations. Very experienced operator. I was initially engaged with them on land acquisition and developed a relationship to where we decided to continue opening locations across Texas, and started raising and allowing other people to invest alongside us in those investments. And I chose those because of the tremendous, because of the relationships, the experienced operator that has a strong track record, and also the profit potential of these locations was much higher than other investments that I had looked at and reviewed. And so I chose to invest my own money, and then in turn allowed other people to invest alongside me. And so we just finished out a fund of 3 locations, Tomball, Full Shear, and Greenville, Texas, and we're currently in construction phase. Those properties have already been entitled, permitted, and we're pouring concrete and getting ready to order the equipment so we can get those operational this year. Once they're completed, those investors that partnered with us, they will receive a percentage of the profits as we operate in the business, as well as they'll receive a percentage of when those properties are sold at the end of our investment cycle.
Well, from what I understand, and correct me if I'm wrong, but you have a higher rate of return on your money rather than having it in a 5% CD or just a savings account, and it's, the risk is not as much as having it in the stock market right now at volatile times. But tell me about the rate of return and how that works.
Yeah, and I don't know if we should break down, some of our viewers may not know. Rate of return is basically the percentage you receive back for the amount you invested, in simple terms. And so that's what I've found from being a long-term investor. I've invested in many different types of asset classes, but in syndications like this, you will typically receive much higher, sometimes even 2 to 3 times higher than you could achieve in like S&P 500 or other types of stock investment accounts. And so that's one of the advantages too, not only the rate of return, but it's also tied to a physical asset in business that's operating, to where it has a little bit more security of your capital invested.
Well, and also due to inflation, being that it is real estate, the property's gonna go up in value as well. So that is a good thing on rate of return. When one day maybe the group of investors decide they want to sell it, and then they do sell it and have a final big check. So that's something to look forward to, because they're not making any more real estate. You know, the government prints money, but you can't go print real estate, and that's the good thing that I've liked about it, and have cherished working with JC and his friendship, because he's done a wonderful job for us. And JC, anything else you'd like to talk about today, that we got some key points of anything?
Well, I think you brought up a good point there, Jimmy, that, you know, the supply of real estate is finite, and it's not growing. And other than a few exceptions in coastal areas, all that is out there has already been created, and so there's a barrier to entry. They can't print more of it. Also, there's a number of tax advantages to investing in real estate, and many times in real estate syndication, those also can be passed down to the investor, and depending on your tax situation, you may or may not be able to take advantage of all of those. But I think at the end of the day, you have to recognize it's not always how much money you receive, but how much money you get to keep. And I would say that syndications and real estate investing can be an excellent tool for helping to minimize the taxes you pay on the profits you receive.
That's great, JC. All of us like to pay minimum taxes, and at the same time grow our portfolio, and real estate is one of the significant ways that I've grown mine. And not only that, if I buy real estate, I can go down the road, whether it be 15 minutes from here or 2 hours and 15 minutes, and see it and touch it, and I have a little bit more control over it, which I like about it. JC, thank you for being on the program today.
Hey, thank you for
having you, and give people your contact information.
Okay, yeah, if those would like to reach me, you can reach me at my direct line is 936-581-4049, or JC at jchequity.com.
Thank you. Y'all have a great day.
Thank you.